Sure. So the voluntary carbon market is really everything existing outside of those government mandates that exist in certain states and provinces. So while the state of California or the European emissions trading system might exist because of a government mandate, there's lots going on in the carbon market that aren't really going on because of government mandate. They're going on for other reasons. And so we really call the voluntary carbon market, it's sort of an ambiguous term to some degree, but it is the voluntary actions of individuals and corporations and not-for-profits and many others that make up, what we'll generally refer to as the voluntary carbon market. One of the big drivers for voluntary carbon has been net zero commitments. Net zero or carbon neutral, these terms kind of get thrown around a little bit. They do have different meanings, but essentially what companies are trying to do is to lessen their carbon footprint. And so in an effort to do that, many of them have made commitments. Many of these commitments extend 20, 30, 40 years out into the future to lessen their carbon footprint. And so by doing that, they oftentimes need to purchase voluntary carbon credits, and so the demand for those credits has just jumped enormously over the last handful of years as those commitments have increased. These companies are now approaching offset developers, carbon credit developers. They are going out and purchasing these credits on exchanges. They're purchasing these credits over the counter. They purchase those credits bilaterally. But there is a strong demand for voluntary carbon credits from the private sector. So offset projects are generally registered in a handful of offset registries. They are standards bodies that sort of house these registries, Vera or American Carbon Registry, Gold Standard. There are a handful of sort of more prominent offset registries out there. Those companies maintain registries, but they also are sort of writing and proliferating these standards for various project types. So they'll tell the project owners what is and is not allowed under a various type of offset project. Those projects can then be verified and validated under the rules of that standards body, and then assuming that everything is in order, they can then be registered as legitimate offset credits within that standard. If that's the case, then they will be issued credits into the registry account, and those credits could then be sold or retired to a buyer. So today, I would say, greater than 95% of the voluntary market probably still transacts over the counter. I think we are seeing some shift towards transactions on a futures exchange, but we're still in the early days of that transition. The growth in the market has been enormous. We've gone from the early 90s, really, when the voluntary carbon market really started to become established. There were utility companies investing in offset projects in Latin America as a way of greening their emissions portfolio. Those transactions were very one-off and clunky and cumbersome. There weren't really recognized registries. There weren't really recognized verification and validation bodies that existed at that time. Over the last 20 or so years, the voluntary carbon market has evolved such that there are now some fairly well-recognized and very reputable institutions that provide sort of the rules of the road for voluntary carbon projects. There are efforts underway to sort of enhance that and to hopefully scale that market even more than it has, because the demand is just so significant, and there really is not enough supply out there projected over the next 10, 15, 20 years in order to meet the demand for corporate net zero buyers and folks like that. There are a couple of platforms that have come about in recent years to put a little bit more structure around the over-the-counter transfers of the voluntary carbon market. IncubEx has partnered with Trayport and has a marketplace called the Voluntary Carbon Marketplace. That is a platform for buying and selling voluntary carbon. And there are other platforms that are out there that provide a similar function for the voluntary carbon market. But by and large, those platforms are OTC bilateral trade platforms, and the bulk of the transfers do not yet take place on a recognized futures exchange. The voluntary carbon market has seen explosive growth over the last several years. What we haven't quite seen just yet is a lot of the growth in the infrastructure around those markets in order to bring them to that next stage of development. And I think what I'm optimistic about is the growth in that infrastructure is now starting to come about. And part of that is from the exchange space, which we're involved in, but part of it is also from other efforts that are going on at various task forces and other outside bodies that are looking at, the SEC, for instance, and others that are looking at the voluntary carbon market, and in a way to sort of bolster its credibility. And so I think as those efforts continue, and that the efforts of the exchange space, the financial world, the banks, the regulators, the verifiers and validators of the world out there continue to grow, I think that confidence in the voluntary carbon market is going to grow along with it.